Jason, Subhashini. Okay. Okay, welcome to the class. I hope everybody can hear me. Uh, First thing we do, we will take the attendance. Is everybody in the class now? 1, 2, 3, 4, 5, 6, 7, 8. Do you know of any other student who is supposed to come to the class? No? Okay, then I will take the attendance. Just wait. Can you see? We are taking attendance to see who joined or didn't join or something like that. Right. Uh, 1, 2, 3, 4, 5, 6. Sometimes your name appear 2 times or you came and left. Oh, it doesn't matter. It's all right. Okay, that's very good. Okay, now okay, recording has been started. Okay, so I welcome you to this class. As you are aware, this class is on business, accounting, and finance. Okay, first, I want to show you. First, maybe I will introduce myself. My name is Chia, Cheah. I'm the assistant professor in this Lincoln University. Before that, uh, I've been working outside 10 years in an American company and 25 or 26 years in a Japanese company. After that, I retired. That's why I become a lecturer for the past 5 or 6 years. Now, in the American company, I was the accountant. And in the Japanese company, I was the executive director of Sony. I think maybe you heard of Sony, SONY. So I was executive director, basically the financial controller. So I'm a chartered accountant. Therefore, I think some accounting and finance I do have some knowledge and I would like to share with you. At the same time, I've got a teaching permit from the Ministry of Higher Education to teach masters in accounting. Okay, to teach master in accounting. So, oh, I got a message. Hang on, somebody want to enter the class. Just wait. Can share the meeting code and password. Oh my. Hang on, please. What is this? Fabian. Fabian, why you don't have the code? Okay, hang on. Yeah, this is the code. Hang on, there's another student. Oh, somebody reply already. Okay, thank you very much. I hope she will comes in. Right. Okay. Now, what we want to do is we want to explain something to you called a table 4. A table 4 is a template that is created by the Malaysian Qualification Agency, which is part of the Malaysia Higher Education Ministry. And in this table 4, we have to submit what we want to teach. So the subject is, of course, business accounting and finance, and this is the synopsis. Okay, you can read here for a short while. And what is the course learning outcome? We've got 4 course learning outcomes. For example, number one, analyze complex financial statement, evaluate investment opportunity, formulate and implement management accounting, and appraise the impact of technology. And basing on this learning outcome, we have chapters, 10 topics. So number one is this one, accounting and business environment. And then you have this quote here, one, CLO. So this means to meet the criteria of the number first CLO, which is, for example, analyze complex financial statement and then financial health performance, whatever it is. So to support that we are teaching CLO 1, 2, 3, and 4, you will have 10 topics, 8, 9, 10. And each topic is pointing to one respective and relevant CLOs. This table will be submitted to the government to show that for this particular subject, business accounting, then this is what we're going to teach, and using these various topics. Now, as far as the assessment is concerned, we actually have some assignment 1, 2, and also presentation, which carry this mark 25, 25, and 10, 50. And your final one is not, I repeat, it's not a final exam. It's actually a journal article writing, which is carry, hang on. Oh, sorry, 25, 25 plus 10 is 60, plus another 40. Okay, the journal writing article. Now, I think some of you may have studied other subjects. What happened to Cecilia Menon? I don't understand this one. Am I supposed to accept her into the thing or what? Is she around? Cecilia?
Yeah, I'm here. I'm around.
Oh, okay, okay. Finally, you're the one who was asking for the Fabian. Sorry, Fabian. You're not Cecilia, Fabian. Is Fabian around? Oh, yeah. Finally, you're here. Okay, so yeah, anyway, welcome. Hang on. So you have to do this assignment 1 and 2, and then you have this presentation, and you need to write a journal. So I will talk about 1, 2, and the other 2. So if you look at your WhatsApp, we have a WhatsApp group which is called MBA ODL 1 Year Business Accounting and Finance. Now, is everybody in this group? Anybody who is not in this group? No problem. Everybody in this group? Some of you join a bit later. Huh? Susila, Menon, Kartik, and I think Alia. Now, if you join later, can you see this one? Because earlier I posted.
No.
I can't see.
Please identify yourself. Can I know your name, please?
Nur Alia.
Okay, you cannot see because I think you joined later. So later, but now you're in this group. Those people who cannot see, I will post one more time. Okay, so you can see it later. Okay, so this was the first one that was posted by me. Notices. So basically, the notices is this one. You can download the file. So your class is Saturday 2 to 4, 1st and 22nd. Only got 2 class. This is the link, and you got 3 type of coursework. Now, when you submit your coursework, this 3, you have to upload into this OneDrive. So let's go to the OneDrive, right? Open link. So you can go to this OneDrive and you can drop file here, or you can put add new, right? So hang on, it's still boss. So can you see file upload? So you will upload into this link, okay? And when you upload, because we got three, you have to upload 3 jobs. So if your name is, for example, Ali, and you're uploading assignment, please put the word Ali assignment, or your name is Muhammad if you're uploading presentation. So your file name should have your name and the type. That helps me to identify, because sometimes if you put another name, which is not the same name that you register with Lincoln, like for example, some student may have registered as John Mary, and but in the Lincoln in your passport is Mary John, so I will get confused, right? So it's good that you put in your name and assignment, so it's easy for me to see, right? And I got maybe about 100 students, so I'm expecting 300 uploading into the various Google. So it helps me a lot if you, when you're uploading in this Google, to put your name, a short name will do. Okay, don't put your ID number, just put your name and tell me what you're uploading. Okay, so we shall now continue. The second thing I would like to share with you is after the notices. Okay, that's why so you got assignment 1, assignment 2, and presentation. Now I'll just go ahead to look at the assignment number 1 first that you have to do, right? Hang on. Your assignment, just wait a while. Oh, actually I can download from here. Okay, so let's look at the assignment. Oh, is it not check come out? Okay, this is your assignment. If you remember, it's 25 marks, so it's important for you to do. It's very slow. Okay. This is your assignment, and please put in your name and your ID. If you have a 4-person to a group, it's all right. Just put 4 names and 4 ID. Maximum 4-person to a group. Or you want to submit as an individual, you can also submit as an individual. Okay, and then you need to post into the Google Drive. Okay, now for assignment, I have identified 3 current issues, and you can select either one of them. Okay, select one to do your assignment. 2,000 words. Type in the word and times New Roman and font 12. And in your assignment, you'll need to type these topics for this, any one of these that you have selected. Okay, so let's say, for example, you may have selected this one, right? So for this particular topic, please write your assignment about this topic. These are the subtopics that you need to include in. Like for example, you need to do an abstract 250 words, that's for introduction to that particular topic, literature review, methodology, finding, discussion. Now this is nearly the same type of what you will do when you do your thesis, except for this, you need to write maybe 40,000 words, But here I'm only asking you for 2,000 words. Now, how you want to do it, you can do by way of AI to help you. It doesn't matter to me, okay, as long as you learn something. Okay, so you send it to me, and if I think it's not up to standard, I will ask you to do the submission. Why? Because if you are not up to standard, I cannot give you a lot of marks. So if I think your one is not so good, I will ask you to resubmit so I can give you more marks. Okay? So far, any question?
Only the deadline.
Okay. We'll talk about the deadline. The question is, do you know how to do this particular assignment number 1?
Basically writing a paper, right? I
Right.
mean,
Basically writing a paper. Okay. So let's look at we'll talk about the deadline later on. Huh? Hang on. Yeah, man. Okay. Presentation. Let's jump a little bit. So presentation is have the same format. Please put your name ID, or you can type your name. You got 4 people, just type the 4 names here. Short name will be okay. So in the assignment number 1, you use assignment number 1 to do a PowerPoint presentation. Means I want you to make a PowerPoint, save it as a file, maybe about 20 slides. That's all. Okay. Whether you need to do the actual presentation or not, maybe we don't really have much concern about that issue. Once you have sent to me the PowerPoint, I will go through it. If I need you to do a presentation, I will tell you. If not, then it's okay. Now, this PowerPoint you just sent to me is 10 marks. It's based on what you write in your assignment. Number 1. Okay. Now, so far, any question on this presentation? Okay. If no, then we'll go to the assignment number 2, which is a case study. Okay. Now, case study, again, the same thing, fill in your name and your ID. Use this as the first page. It's a 1,000 word to answer the question. So I put here a case study. This is a case study name. Introduction, defining the core fraud mechanism, scale of financial damage, accounting implication, finance and economic impact, and regulatory prevention and control mechanism and so forth. So there are many paragraphs. So I want you to read, and this one actually comes from this particular URL. You can get from there. Okay, you can get from there for more information. I have summarized this particular article, a case study on the on above. Okay, so based on this case study, you are asked to answer 2 questions. All must answer. Okay. Now this case study is 25 marks, so it's about 12 and 13 marks. Okay. So please see the wording here. Appraise, describe. I'm not asking you what, you know. When I use the word appraise, I'm going to look at it and appraise. When I ask you to describe, you describe. Okay. So these 2 words here will try to prompt you into high-level critical thinking, synthesis, and judgment on the above case study. Okay, so you can type it in words and then send it to me. It's for 1,000 words to do. Roman, font size 12, and whether it's assignment or case study, please do a review, right, and do a spelling check. Okay. Now let's go back to the last line here. Hold on. Okay, the deadline here is 15, which is about 2 weeks away. I think some of you are maybe working, you're busy, right? And you want to do an extension. Can I extend to you latest 22nd, which is your last day of your class anyway? Okay, 1 more week for extension, and you need to submit all this to me, because after that, after the 22nd of November, I think December you have another class, right? So if you have another class, you will be busy with another class, so you must finish the coursework of this particular class first, right? Is it okay with you? 22nd?
Yes, okay.
Yes, okay, Doctor.
We will try our best.
Yeah, I don't think it's that difficult, no, because in the assignment you can also use AI, and once you do the assignment one using AI, and then the PowerPoint is based on the AI, so you can ask AI to summarize it into PowerPoint for you, and then the case study you can also use AI. Okay, but when you give the actual wording, you cannot actually 100% copy from the AI. You can use AI as a tool to get out the data, and then you may need to look at it, re-summarize it, or re-synthesize it, or whatever it is. Okay, but the key point, it is quite high in marks, 25, 25, and 10. That is about 60. So if you do your coursework well, your final exam will not be so taxing on you. Not sorry, your final journal will be not so taxing for you. Now, if I look again at table 4, right? So this must be done by the 22nd. Okay, so I will change the deadline here. And I will send to you again these 2 things. Okay, David.
Sir, can you help us to group into 4? Because we don't know each other.
Sorry, I cannot hear you.
You can help us to group into 4
No.
among us.
No, because it's how do I say? It's like
Because
as if
we don't know each other. That's the
then I
problem.
suggest you talk among to each other. It's not fair for me to group you, because it's I do not know your background, and it's like as if I'm forcing. This is not a primary school. This is a university. I think you're big enough to contact each other and then talk to each other. Okay. Normally, I will never do. I will never do grouping. Okay. You have to contact each other. And now how to contact each other? Very simple, isn't it? You got a WhatsApp, isn't it? So inside the WhatsApp group, you can see, if I'm not mistaken, you can see the group info. And under the group info, you have got all the wonderful telephone numbers here. Right? So you can see for yourself. And then you can discuss, such numbers. No, sorry. View. Okay. Oh, yeah. Sorry. So, yeah. You have got all your telephone numbers, name, you can contact among yourself. Okay. Okay. Having said that, now the last one is this one for the table 4. Here comes your 40 marks journal article writing. Do you all know what is a journal? Okay.
Never done before.
No. I'm not asking you. You done a journal before? No, I'm saying, do you know what's a journal? Okay, I will show you an example. Let's say, for example, this type. Journal is for example, journal anything. Okay. So there are many journals. So okay, first one. So see the way they write article. So you have a journal, and then you can see how they write the journals. So for example, okay, anything. Okay. So see, can you see you have abstract, introduction, right? Research project, literature review. Well, of course, this is a very long one. Problem statement, research methodology, analysis, and so forth. It's exactly the same as assignment 1. Okay? It's exactly the same as assignment 1. When you write an article in a journal, these are the topics. Now, what is the subject for your this particular journal? You select. The deadline is end of February. Okay? End of February. It's not end of November. So you have a lot of time. You can write your article and then send it to me. Now, do you need to publish? Okay, as of this junction, there's no requirement to publish. You only need to send your article to my Google OneDrive. Okay, so it's the same. Now, how many words are we talking about? Because your assignment is 2,000 words, right? It doesn't specify how many words. The word Q3 and Q4 is actually quality of journal. Scopus quality number 3, Scopus quality number 4, or Scopus index. So inside the index, there's a lot of journals. But if you need to publish your journal, you may have to pay some money. And your journal may be a peer-to-peer review. We don't need that. We just need to write something and then just give it to me. It's not going to be published if there's no peer-to-peer review. It's only going to be reviewed by me, that's all. What is the topic? Up to you. Anything that relates to business, accounting, and finance. Don't write anything about HR. Okay. For me, you need to write something about business, accounting, and finance. Any topic, up to you. What's the words? No control. Up to you. But of course, you're not going to write 40,000 words, right? You write 2,000 or 3,000 words. It's okay with me. But don't 500 words, because you cannot cover all the requirements, right? So is that clear for you guys for the case?
Yes, clear.
Clear? Where am I now? Oops. Validation. Oh, Teams. Right. Okay. So far, anybody got any question you'd like to ask me? Okay. Now, what I have done, you can also see in the WhatsApp group, okay, is that I have made for you 10 topics under SIM, right? Hang on, let me open the folder. Oh, can you see? There is 10. There's topic number 1 to topic number 10. Now, we're going to meet only 2 times. So today we're just going to go through 1 to 5. Okay, and then you will next time we meet, we'll talk about 6 to 10. Okay, today we talk about 5. Now, what is SIM? I think we have finished the assignment. We can close it. Close it. Presentation. Close it. Assignment. Close it. Presentation. Okay, so what I've given in the WhatsApp group. So you can see, as you scroll down, you can see all this, right? Oh, before I forget, when you submit your coursework to the OneDrive, don't use your handphone, okay? Use your laptop, because your handphone setup may be in conflict with my Google. So sometimes when you say you send, but I cannot receive it because you're sending by phone. When you're sending your presentation, case study, and also your assignment, please use your laptop to send. Okay. So can you see topic 1, 2, 3, 4? Which is given to you 5, 6, 7, 8, 9, 10. Now in ODL programs, okay, we don't teach like in conventional mode. We are using ODL mode. In ODL mode, of course, I think you may be aware, the lecturer will give you the sim. Okay, so this is self-instruction material. And let's look at the first one, for example. Right. So you are supposed to read. And then if you got any question, you can always post it into the WhatsApp group. Okay, don't post question to me individually. Post it to the WhatsApp group so that when I reply, the other student can also see what you ask and also can see what I reply. Okay, now in all the sim, you have the topic number 1, 2, 3 or whatever it is. This is the table of contents, and you have the learning outcome, key learning outcome, and then for example 1.1 is this one. Okay, 1.1. And in 1.1, normally you will see some graphs or diagrams and some 5 or 6 paragraphs related to it. You have infographics. Okay. And also you have another, this is the first one is the infographic, which is on the income statement, and the other infographics, which is on balance sheet. Okay. And we also look at the video, and there's always I always quote the source one, so you can of course go inside it to open the hyperlink if you want to look more detail. And also for your ease, I have also summarized the video, what we learned from the above video, and you will have a self-check. And under self-check, I will post a question, and at the bottom you will see the model answer for the self-check. So this is self-check number 1, and then always I will give you 3 short answers. Okay, so let's go back to here. Then of course you have the activity. Now activity is just for you to prompt your thinking. You don't have to do anything on, evaluate. So if you got time, you try to think about this activity. You don't have to do anything on. Even the self-test also, self-check also, you don't have to do anything on. You just read as well. Okay, and go to 1.2, and the same thing repeat and repeat. 1.2, 1.3, 1.4, and for every video, I'll give you the transcript or summary, 1.4. Then one more summary of every one of the subtopics. So topic number 1 got 4 subtopics, so we have a summary of each of the subtopics. And I will give you a case study. We call it a closing case. So this is a Enron operation, and I will summarize this case study, and this is the reference for getting this case study. Okay, this is a summarize. The case study is summarized. If you want to more detail, you can just go inside there, right? Click it, copy it, go to Google and get it. Okay, then you got 2 questions. You're not supposed to answer. Okay, this is just to prompt you only. You don't need to answer and send it to my Google, my OneDrive. Okay, you know it. This is just to prompt you, because in ODL learning, a lot of learning depends on you. But to prompt you, we will have the self-check question, we will have the activity, and we have a case study for discussion. Okay, key terms also important. You have the model answer because you got 4 of them, 4 subtopics, so you got 4, and you have all the references. So at any time in the body of the topic, let's say for example, can you see this paragraph is getting information from Kumar. Okay, so if you want to know more about Kumar, you just go to the reference. Okay. Yeah, you can just go to here, copy paste, then you can here you cannot do a open link. You just copy paste this one, and then you just go to your normal Google, right? And the more detail will come out. Okay. Oh, okay. So I am not going to go through with you topic by topic. Okay. ODL doesn't work that way. ODL work in, we are giving you something to read. It's shorter than a book. You read it and then we try to discuss. Okay. So if you have not read any of the topic, it's fine. You can just listen, during the class. Okay. So we will do the first one, the accounting and the business environment. So anybody want to share, or anybody have read this particular topic and they want to share something? I know you're working, okay. I know you'll be quite busy, okay, but the sim was made to help you. That's why for every subtopic, there's only 6 short paragraphs, and there's a summary, and there's a self-check. Okay, so I hope you will take some time. You will use some of the time to look at the sim, just glance it, glance at it. Okay, so topic number 1, which is the accounting and the business environment. I think most of you are working. Any one of you have come across accounting work or accounting information? So can we just start the ball, Jason? Jason, can you hear me?
Yes, yes.
You come across any accounting information during your work?
No, no.
No. Okay, so you can now listen to another person. Vengadish. I hope I pronounce your name properly.
Yeah, correct.
Vengadish,
No.
you never come across any accounting. What about
Yes.
Muhammad Shabril? No?
Yes, yes, doctor.
You come across any accounting information or any accounting balance sheet or P&L? Muhammad?
No, no. Actually, I have a background in procurement. Actually, I a bit familiar with the accounting lah.
Okay. So what do you do in your accounting?
Uh, we previously we have
Can,
done
can we ask you to on your camera?
okay,
So
can.
at least we know who are we talking to.
Sorry, actually, I have something because someone installing account at my home actually, so I'll be like interrupted lah. So never mind, I open my camera.
Okay. You have
Okay.
you say that something about accounting. You want to share something about accounting?
Not really, but actually, my experience is more to procurement because I in charge for the supply chain and also procurement for the company lah. But a little bit, I have experience in the accounting purpose, which is I'm in charge with in the billing.
Okay, billing.
Say,
Okay. So let me comment. Now you are maybe involved in a procurement. So maybe you're working in the factory or something like that last time?
not in the construction company.
Okay. So somebody asked to buy something, right? So maybe
Yes,
a
correct.
cement or nails or paint, whatever, correct? You may have a few selection of a supplier, then you select one, then you give a purchase order, and they will deliver to you, right? The items.
Correct.
And then
Yeah.
later on, maybe they will bill you, right? And then you may have to pay. So the billing part will be involved by the accounting people because they want to have to do with the monetary matters. So what does that mean? It means that accounting is involved in many areas of a company. Okay, because you're talking about money. And accounting is a very funny profession. Every type of industry needs accountants. Okay, for example, if you are a mechanical engineer, most likely you will be working in a mechanical engineering firm, or you are an architect. For example, you are an architect, you will be working in an architect firm. But the architect firm will need an accountant. Okay. Now, if another person working in making making mineral water, so the mineral water company will have an accountant people, but they will not have the architect. The architect company will not have a person who knows something about making water, but all industry must have accounting. Therefore, accounting is a job that is easy to find. Accounting is easy to find job because it goes to all industries, and the accounting is the one who create information based on transaction. What are transactions? Financial transaction. Maybe you buy things or you sell things. That's why you get to pay people, or you have to receive money from people when you sell things. All this information, financial in nature, will be recorded by the accounting people. At the end of the day, the accounting people will come out the profit and loss to show the company is making profit or making a loss. Now, why is that important? Because if you make profit, you have enough money to pay your suppliers, pay your employees. What happens if you make loss? You can have a problem, your company will go bankrupt. So getting accurate information on time is very important for you, especially when you have the actual information and you compare with your budget. Let's say, for example, your budget, you're going to budget 1 million sales. The actual is 900K. So there's a variance, right? So when there's a variance, you have to investigate why we cannot achieve the 1 million, why we only achieve 900. In other words, by asking, it triggers action. And the action will be the countermeasure to try to do not repeat the same mistake again. So in the next quarter or in the next year, you achieve 1 million. So by itself, the accounting information tell you what is going on. That's fine. But if you have put in a budget or put in a plan and you compare the actual with the plan, it triggers the action that need to be done. Maybe, for example, your budget, you spend $1 million on salary. Actually, you spend 500,000. Oh, that's good for you. You don't need to take action. But if you have another expense, maybe, for example, you want to budget electricity as 1 million and you spend 1.2 million. Here comes the trigger. Why? How can we solve? How can we reduce? So accounting can be used as a tool. Okay, as a tool to help you know where is wrong. And the only way to tell where you're wrong is when you have a plan. So you can compare actual with plan. Now, who makes the plan? Who makes the actual? Actual is very simple. It comes out. That's why, right? So who makes the plan? The plan for accounting, depending maybe on the accounting people, together with all the other various department heads, they have a budget. But most of you are working, so you will know what I'm talking about. There will be a budget by month, by product, or by lines, various type. So we go to a budget meeting and your budget is approved. So that is your plan. Okay, and then we will now monitor you. The accounting will show what is the actual and what's the budget. Let's have a meeting together with a big boss. Those who are not so good variances may have to answer and come out some action, right? So how do we do that? We will now look at every day you got invoices, credit note, purchases, expense, salary, and so forth. These are the financial transactions that occurs. You analyze this transaction and you make some recording, and the recording will come to summarize under a thing called a trial balance. And for the trial balance, you can make the two important document, statement of financial position and comprehensive income. So this is an example of a income statement. What is your sales? What is your expense? Now this can be made monthly. By law, it need to be made yearly at least once. Okay? To show the company is how much is the sales and how much is the expense, how much is the profit. Right? Now, this is the actual transaction. But of course, if you have a budget or plan, if the budget is, let's say, 50K, oh, also good, right? You need a 30K. So we need to analyze why. So it's good, or can I say, most companies will make this kind of statement every month. Every month they will make this kind of statement, actual compare against plan. Now, why is the income statement important? To show whether you make a profit or not. Right? Now, if you want to go to the bank to borrow money, let's say your company want to go to the bank and borrow money to want to make a new factory or buy a new machine or whatever it is, the bank going to ask you, where is your income statement? Not 1 year. Give me the past 5 years so they can see the trend. Why? Because if you are making a profit, chances are you can pay back the loan. Banks are not going to lend to you if you cannot pay back the loans. So if you have a loss, nobody's going to lend to you. Now, if you want to ask for investors, okay, or you want to joint venture, or you want to have a merger with another company, or you want to have new shareholders, they're going to ask for your income statement. Nobody will like to be involved with you if you are making a loss. No money. No money company, you don't get involved. This is the income statement. Now, the second statement is called the balance sheet. It shows the asset and the liability that your company has. Right? How much asset? For example, you make cash, interest, prepaid, rental, supply, whatever is machine, you got 48K. How much you owe people? 15K. Oh, not so bad. So if I'm the bank, I know your asset is more than your liability. Now, why is this important? If tomorrow your company closes down, I can sell this asset for 48. I pay back people 15. I still got 32. Okay? And if I see this is quite okay, you still got some money after asset minus liability, and I see you're making some profit, maybe I'll give you a bank loan. How much? Well, it depends, right, on the bank. But basically, I can do a business with you if I'm a banker. Now, not only that, what happens if you're a supplier? Okay, let's say, for example, you're making car tires, right? Maybe you want to have some latex, rubber latex. So I'm the supplier, and you are a big customer. Now, before I do any business with you, I may want to check your income statement and balance sheet. Because if I supply my rubber latex to me and you go bankrupt, you're not going to pay me. So why should I supply to you in the first place? Now, how do I get this information? Income statement and the balance sheet. Every company, you need to file this with the ROC, Registrar of Company. In Malay, SSM, Suruhanjaya Syarikat Malaysia. Okay, there's a branches every state. Headquarters is in KL anyway. So you file this document by law. This must be filed by law, the balance sheet and the income statement, and anybody can just walk into the SM office or the ROC office, pay small money, 10 or 20 ringgit. They will get all your income statement and the balance sheet. Okay? So from there, they can make decision whether I'm the bank will lend to you, whether I'm a supplier, I want to supply to you, right? And so forth. Or if I'm an investor, should I invest money in you? Or if I want to have a joint venture with you or merger with you, what I want to do with you. Even as an employee, let's say, for example, right now you're general manager of a Hong Kong bank. You will offer to become a senior general manager in Standard Chartered Bank. So before you leave Hong Kong Bank, go to a higher position in another bank, maybe you look at the income statement and balance sheet. Can the company pay your salary? Is the company so can survive? You don't go to another company when you have a high, when you currently you have a high paying job, you won't go to another company just because they promise you something. You better check the new company, are they Do they have enough money to pay you? Because you go to a new company and they went bankrupt, you cannot go back to your own company, right? Because the position already filled up. So many people are interested in your accounting. Okay? So there's a video for you to look at, right? These are internal. So how do we know? Since a lot of information is given from here, from these two statements, and many people make their decision based on this information. How do we know you're preparing the correct accounting? Do you bluff or not? Do you tipu, or you create numbers? So by law, your accounting need to be audited by the external auditors, which are not employees of the company, which is appointed by the shareholders. Now it's very strange. The shareholders give money by buying shares. The money go to the board of directors to run the company. So what you have is, I give the money, I run the company. Board of directors never give any money, but obtain the money and run the business. So how do we know whether the board of directors is doing correctly or not? Therefore, they prepare accounts. Now, how do we know the accounts is correct or not? It must be audited. So we now need to have an independent auditor. We cannot have employees of a company to become the auditors, because they pakat among themselves, right? Not to create funny accounts. So external auditors are appointed by the shareholders in the annual general meeting, right? So famous auditors, external auditors, Pricewaterhouse, Deloitte, okay, Kasim and Chan, and so forth. Now you can use any other external auditors, because external auditors are appointed, given a practicing certificate by the Treasury, and Treasury will base whether these people are qualified or not. Okay, they have their own criteria under the Malaysian Institute of Accountants. Okay, so okay. Now, the second part is a form of business organization. Okay, there are many types. I think most of you know already. Partnerships or proprietors. So you can read from here. Okay, I just want to say that if you are having a partnership, make sure you have a partnership agreement, because practically speaking, you and your partner now are friend, very good friend, even relatives, father, son, or whatever it is. Okay, best of friends. After a while, they get into conflicts. One partner say want to buy a car, the other partner say want to buy a machine. You know, that kind of conflict. And some partners say I want to get out, and some partners say I want to bring in new partners. So you better have a partnership agreement. It's for practical purpose. Now this chart here shows the comparing of differences. Okay, private and limited company. Now, what is a public company? A public company is a company with shares in the stock exchange. It's traded. Okay. A private company got shares, but it's not traded. So if you have a shares in a private limited company, right, selling your shares is a bit difficult. So that is why a lot of people do not want to invest in private limited company. If I got money, I go to stock exchange, I buy and sell. Almost instantaneously, I buy, I pay. I sell, I get the money. Right, with stock exchange. So because of that, many companies want to go into public limited company, because it will be a bigger base, okay, for more buyers and sellers, so they can issue more shares. Okay, the regulative framework for accounting. We have the Malaysian Accounting Standard Board. This board is actually a committee that was created by the Malaysian Institute of Accounting. Malaysian Institute of Accounting is created by the Act, the Accountant Act. Okay. Now in Malaysia, according to the Accountant Act, if you are not qualified to be a member, you cannot call yourself accountant. Okay, there are many grades in MIA. One is a chartered accountant, the other one is the normal accountant. I'm a chartered accountant of MIA. 1980s, maybe 40, 50 years ago. Right. So now when you're doing accounting, you need to have a little bit of ethics. No, you should not create funny accounts so that you want to borrow money from a bank or you want to bluff the investors, bluff the shareholders, that kind of things. So you need to have some ethics. And there's a very interesting video here. This video is every major financial scam. Why we have financial scam? Oh, financial scam is created because somebody play around with their accounts. So why doesn't the auditors found them out? Because auditors are doing sampling checking. They do not check all the 100% of all the financial transactions. So if the CFO, the CEO, the CFO try to play with numbers, accounting numbers, well, to create a better picture, so they can borrow money or get more investors and so forth. One of these days they get found, then they landed in jail. Even the external auditors are also involved in this case. Enron, one of the biggest. The external auditor is Arthur Andersen, used to be one of the top 5 in the world when bankrupt. And also with other financial scandal, like for example, I think this one I don't say anything. Okay, you can see for itself. So there's a summary. Okay. Now the last one is globalization and international financial reporting. Now I think you all know, everybody know. Okay, traffic light, red, green, yellow. Each represent certain things. Therefore, we have a standard. Red traffic light means stop, right? Red means can go. I'm sorry, green means can go. Yellow means get ready to stop. So this is a standard. Now, in making accounts, we also got standards. How we can book the accounts, in what kind of treatment of the account. Basically, most majority of the world is using international financial reporting standard. Malaysia, we follow 100% international financial reporting standard, but we put an M in front. Become Malaysia International Reporting Standards. Except for America, they're using GAAP, generally accepted accounting practice. And in a communist country, they have China, Russia, they have their own standard. But the rest of the world, right, maybe 98% of the world is using these international reporting standards. Why? Because if I'm an investor, I want to look at the accounts of a company in Bangladesh. And then look into accounts in a company in Australia. Both got 2 sets of accounts. Both also got income statement, both also got balance sheet. Can I trust it? I'm a Malaysian investor. Right? Bangladesh and Pakistan or Australia, can I trust? When I look at the accounts, if I know they're preparing on the same standard of treatment of accounting information, I will be much more happy. Then Bangladesh have their own accounting standard. Australia have their own standard. I do not know which standard they are following. I, international investor, very confused. Same with the banks. Or within one country, in one type of company, construction company have one standard of doing account. F&B industry have another standard of doing accounts. If I'm the investor in Malaysia, 2 type of industries in Malaysia having different accounting standards, no, which is the correct standard. Because of that, the government mandate we will follow only one standard. Okay, which is the Malaysian International Financial Reporting Standard, which is an exact 100% copy of the International Financial Reporting Standard. Okay, and many countries are following this standard, except for America and countries. So this arises because of globalization. We are investing everywhere, right? So benefit and challenge, enhance global comparative. Compare one Australian company with a Bangladesh company because we are using the same accounting method. Improves transparency, cross-border investment. So the challenges is quite complex. That's why accounting is not easy to pass. It's quite a difficult course to do anyway. Training education of the stakeholders, various stakeholders, okay, alignment with local laws and regulation frameworks. Yeah, this is some of them. Anyway, so let me sort of summarize it. For chapter 1, we have accounting, which actually provides information which can be used by internal and external users. Internal user have their own game plan, the external user have their own game plan. But the fact is, many people using this accounting information, therefore we must make sure that accounting information follow certain standards. And how do we know that you are following the standards? Because the accounts will be audited by the external auditor, and your accounts must be given to the government, okay, to be filed. And anybody outside can just walk in, pay a bit of money, give your company's name and the company number, and you tell the counter, I want 5 years or 10 years of income statement or balance sheet or other information, annual report information, you can give it. So it's quite a transparent work. Okay. Now, besides that, the sole aim of every company is to, number one, is to make profit. Must have money. The other things like business ethics lah, CSR lah, corporate social responsibility will only come about if you make profit. If you don't make profit, your company will close down already. So forget about the ethics, forget about the CSR. So you must make profit. So how do you make profit? So you collect all the data. What's the sales, what's the expense? That's the bottom line. So how to make better profit? You compare with your plan. So you can know each line where is it out, there's a variance, then you can look at the variance, question the variance, what happened, and try to find countermeasure so that the same mistake would not be repeated in the next quarter or in the next year. Okay, so I think that's what I have so far. Anything about chapter 1? No issue. Subhashini, any issue? No. Fabian, any issue? Sarah?
No, sir.
Okay, so now we don't have much time. We will now go to chapter 2. Now, actually, I expect you all to read first before you come here. So recording, reporting, analyzing. Business transaction. Business transaction is you buy something, you sell something, or what something or whatever relates to money one. So in accounting, we are doing a lot of recording. Okay, and we record it in debit credit. Okay, and how do you know which is debit, which is credit? Okay, there is actually every type of account type. If you increase, normal balance is normally a debit. So if you increase, you a debit, and if you decrease, it's a credit. So say, sir, what is debit and credit? Right? Debit and credit is the way it is recording. Okay, now when you talk about financial transaction, okay, let's say for example, I paid 5 ringgit to 7-Eleven. I buy a mineral water. That's a financial transaction according to 7-Eleven. What is the activity? 7-Eleven sell the mineral water. What's the result? 7-Eleven get 5 ringgit for me. So debit and credit is something like that. What is the activity? What's the result? So we are recording the activity and the result. Okay, so one is a debit, one's a credit, and the amount is the same. So in normal accounting, we teach you by way of T accounts. Okay, one side is the, T, one side is the debit, and one side is the credit. So maybe if you're talking about sales, so one side, sales is the credit, 5 ringgit, and cash. Another T account, cash, is the debit. So as far as 7-Eleven is concerned, he make a sales for 5, and the cash received was 5. The activity was sales. The result was cash increased by 5. That's what it means. Accounting is always talking about what happened, which is the activity, the financial transaction, the activity that involves monetary numbers will be recorded. Now, if your company is having, for example, other activities, let's say in-house training, In-house training is an activity, but there's no money involved. You do not pay an outside consultant. So that kind of activity is not recorded in the accounts. But if the training was done by an outside consultant, where money is involved, so what do we have? Cash out. It's a result. And the activity is we get somebody to train, somebody outside to train. So on one side is the expense, training expense is the activity, and the result, our cash reduced by certain amount. So it's always a recording of activity and the result. And because of such recordings, millions and millions of recording if you're a big company, okay, or you're a small company, maybe one day got five activities. Okay. The summation, the aggregate of all these activities can be grouped out together to show profit, show expense. That's the key. Okay. So we are not having actually a financial accounting class, so I'm not going to go through very detailed. So we have an accounting equation. Asset equals to liability plus equity. Okay. What it means is that if you remember, all the financial transaction is here. You sell, you make, for example, revenue. Okay, you sell your services. It will be reflected as a sales here, income statement, and also reflected in the cash here when you receive the money. Or if you have not received the money, it will be under receivable, notes receivable. Somebody owe you money. Okay, so at the end of the day, your asset is equal to liability plus equity. What does that mean? Okay. Your company has 48K asset and your company owes 15K. That means the shareholders are paying you some money to the company so that your shareholders' money is used to buy asset, and also some of the asset also you borrow money from people. That's why you have the liability, and this is the net worth of the company. So asset is equal to liability plus equity. Okay, so what does that mean actually? So you can look at this accounting equation explained in the video. I summarize it for you. You can just look at it. Key concept, buying asset, making a sales. These are examples. Okay. Self-check, give the same thing. Okay. Now, when we're talking about making financial transaction, recording all these transactions, you can make the balance sheet and the P&L. So this is an example of a trial balance. Calling consultant have got a lot of transactions. So the transaction that relates to the cash account or whatever account from this trial balance, certain extraction will go to the income statement. Certain extraction will go to the balance sheet. Okay, because every time we pass in the journal entry, we are recording debit and credit. That's why you always balance. So let's look at the video. What is accounting cycle? What do they do? Okay, basically in accounting they do two things. Transaction identify. Something happened. What happened? Is it a sales, a purchase, an investment, or expense? You identify first. What is that transaction? Then you record debit and credit. Now, why must you do recording? Because you have many transactions. You cannot keep everything in the brain. So you can record a piece of paper, you can record it in Excel, or you can record it in accounting software. It doesn't matter. You record somewhere. Okay. Then you post to the ledger, which is the account balance, come out the trial balance, then prepare the financial statement. That's how it works. 8 phases. Okay. Now, accounting information. Okay, this is the financial statement I show you again. The income statement and the balance sheet, and also we've got one more cash flow. Now, why is this important? Now, let's look carefully again in the income statement. Okay, I got sales, I got expense. This is my net profit. Is it equivalent to cash? May not. Why? Because you say you make sales, but you have not collected the money yet. You say you have got expenses, salary. You have not paid people yet. So this figure not necessarily equal to cash. Unless you have collected all the money and you have paid all your expenses, then this will be equivalent to cash. Okay? So the income statement only show how profitable are you. But the cash flow statement will show your cash balance. Okay, so this is a cash flow from operating. You flow from a profit, rent, salary, or whatever outflow you pay for some activities. You get some inflow, outflow for loan or outflow for buy equipment or whatever it is, then cash flow from financial activities. Therefore, this is the next change. If your beginning is 0, then your ending cash balance is 1250. This is the life of the company. You may make a loss, unfortunately, but if you still got money, the company won't die. That's the key. Many companies will actually need this cash flow statement. Where did the money come from? Cash flow from operating activity, your normal business. Cash flow from investing. People invest in you or you invest in other people, or cash flow from financing. Whether you borrow money or you lend money. Okay, these are the cash flow of the company. And this is the amount of the cash at the end of the accounting cycle monthly. So you say, hey, sir, if that's the case, that's when we look at the cash flow. Forget about the income statement. But after all, this is a theoretical how much profit you make. It does not represent the increase in cash. Why don't we just drop this one? I would say no. Because this statement have a different purpose. It shows whether you're profitable. This statement shows you the money that is involved. They have to work together. Now, what happens if you only got cash flow? You only make cash flow. So it'll show you the cash goes in, cash in, goes out. That's all. It does not show whether you have a profit. And if you have a budget area here, it does not show you where you need to do your future countermeasure activities. So therefore, you need to have 3 statements, basically. Okay, basically. So we have a video here. You can go inside this website and see. You can just click here. Open hyperlink if you are interested. Okay. So you explain what's a cash flow statement, everything, and then okay, the next one. I'll talk about internal control. Now, what is internal control? Internal controls are controls set up for every area of work in the company. For example, we don't want a husband and wife working together in one department because maybe they can do some hanky-panky. We don't want you purchasing. You don't buy things, Mama, unless you've got somebody give you a purchase requisition. Accounts department won't pay unless they have goods received and the invoice show that the goods comes in and the invoice comes into the supplier, and we will take the invoice to matching with the purchasing department that this is what we buy at this quantity and this is the price. So these are all internal controls. In other words, policies, procedures made by the company to safeguard its asset. The company will not simply pay. Do not want to be cheated. So internal control are there to help the company not be cheated. So having said that, you better have the internal control written in the manual. what you can do, what you cannot do. Okay, in your accounts department, who can sign the check? Can sign check up to one manager can sign check up to maybe 10K. Above 10K check need to be signed by GM. Above 1 million need to be signed by the CEO. So these are internal controls. There are many types of internal controls. Okay, so when I'm an auditor, remember I'm checking your account. I'm an external auditor. I check your internal control. First, do you have an internal control? Next, is it written? Do people follow the internal control? Now, if we know that if I'm the external auditor and I know, okay, for cash control, you have internal control, everybody is following it, so I will not check so much. But if I go to another area, okay, now I'm the auditor, I want to check marketing expenses. Do you have internal control? Who can advertise? Who can appoint? What type of singer to sing jingles for advertising? Okay, where is the check and balances? Okay, internal control is also about check and balances. If there is there, then that's not the issue. But if it's not there, then you got a problem. Okay, I will now in my class I always try to use practical. So I will give you an example of what is the internal control. I don't know where to hang on. No, I used to work in Sony Supply Chain Management. There's not somebody say Sony Supply Chain. Okay. For example, last time this I created when I was in Sony Supply Chain. Okay, Sony Supply Chain. So capital expenditure above a certain amount. Okay, board of directors must sign. From here to here, maybe MD sign. Below, or maybe sector head. That means the general manager can sign. So it can be anything. It can be management policy, opening new business, budgeting, who can make the budget approval, who can make amendment on the budget, capital expenditure, income, who can give a contract quotation, credit limit, if our customer, what is the amount of credit limit, who can sign up to what amount. This is example of an internal control. So when you have a policy, okay, that is controlling who is doing what, okay, then we have some sort of internal control, and then we see whether are people following. And if people are following, we are not so skeptical. But if you don't have the internal control, okay, then you don't know whether your account is crazy or not. And you must remember, auditor most likely check about 5 to 10%. They won't check 100%. So it's good to have internal control so that your company will not be caught in a bind, because there's always a check and balances. Okay. Who am I now? Okay, internal control. Cash management. Yeah. Cash management is important. That's what I was saying, because no cash cannot run a business. Simple as that. So you should not let people steal, and then you should have enough money. Like for example, now is November, right? Chinese New Year is coming. Oh, Christmas is coming. So we need to buy a lot of things put into our supermarket. Okay, I'm a supermarket businessman. I need to put in a lot of items in supermarket because Christmas is coming. People are buying, so I need money. All right. So do I need money in December? Yes, of course. So when do I borrow? If I borrow the money in December, if I go to the bank in December, bank say, hey, wait, we got some paperwork to do. It will take us 2 months to approve your loan. That means you are caught. Therefore, you need to apply the bank loan in September. So if you have a cash flow forecast month by month, okay, when you need money. So if you need money in December, you better go and borrow in September. Get all the paperwork done by the bank, so the bank will give you the money by November, so you can buy the goods to display in the supermarket in December. That's the beauty of a cash forecast. Now, everything depending on, well, how accurate is your forecast, right? Well, of course, forecast is not the actual, so sometimes you're way out. Okay, so there's some sort of techniques, like for example, probability techniques or simulation techniques and so forth. So to try to improve your forecasting so that you know when you need money. Okay, and so you must borrow now. Okay, or when you have excess money. when should you use the excess money? Okay, say let's say you forecast maybe share market will goes up in 6 months time, so maybe you need to save your money right now so that you can buy now, reap the benefits in 6 months time. Okay, this is the benefit of a cash management. So cash management is like you're doing a business. Right? You're okay, for example, you're making mineral water, right? So you buy a lot of empty bottles, right? Now in the outside world, I think most of you know, I will buy the empty bottles, I don't pay. I take the empty bottle from you, thank you very much, give me 60 days credit, right? If you don't give me 60 days, but I don't buy from you, I buy from another supplier, right? So this one must give me the empty bottles, I pay you back in 60 days. Within that 60 days, I faster fill in the water and I faster sell to Giant and collect the money from Giant, then I pay you back. Right? So supplier 60 days, okay, I don't pay you. In the meantime, I take your 60 days, I create money, and then I pay you back. In other words, I'm using your money to generate money for myself. Okay, that's normal in all business. Okay, so we try to delay payment to our suppliers. We try to get money from our customer as soon as possible. Yep, that's cash flow management. That's how it works. Okay, so far, let me summarize. For this particular chapter, yeah, we know. Oh, I closed the file already. Anyway, for this particular chapter number 2, important thing is the cash flow forecast. Okay. So far, are you guys with me? Any question?
No. Hello,
Okay.
James.
Okay, we still got another 3 or 4 more. Last one, analysis, interpretation of cash flow. Now you have the financial statement. You must know how to interpret it. Those are just numbers. You need to interpret it. Okay, for internal people, they always take the actual data compared with the budget. It's easy to understand. Okay, external people, they don't have your budget or whatever it is. They only got your actual data. So they will now compare your data. Let's say, for example, you are Aeon. I want to compare Giant, or I want to compare with Lotus, right? These are all same industry, supermarket industries. Okay, I will use the data, and sometimes I will make ratio. I will use the data, convert it to ratio, and compare ratio of Aeon with the ratio of Lotus with the ratio of Giant. Why I do that? Why don't just take the amount myself? Okay, maybe Aeon is big, Giant is smaller. So if I just compare numbers with numbers, of course, every time Aeon will win. But if I compare ratio, it's different. We are comparing the efficiency, not comparing the scale. Okay? Now, what I want to say is that, for example, if you look at Aeon, a very big supermarket, and we look at the local, a small little grocery shop, of course, Aeon is millions and billions of sales. The small little shop is not so much, lucky to get 500,000 sales in a year. But when we convert to ratio, we can see who is better managed. Why is that important? Because sometimes as an investor or as a banker, I will look at ratio and see how much to lend. If you're a small business, but you are run very well, therefore there's a potential of growth, I may want to invest and lend money to you. If you're a giant, but you're not running very well, I hesitate to lend you money. Okay, so this is why we have interpretation of cash flow. Now we have a few ratio. We use ratio to analyze. Ratio is used to gauge a company performance and stability, translating complex dollar figures into comparable metrics. If you're talking about Aeon, 2 billion sales, Compare with a small little entrepreneur shop, 500,000 sales, you're not comparing apple with apple. But if you train it to ratio, that is a common comparative ratios. Of course, I'm not asking you to compare Aeon with which is a supermarket with Sony, which is an electronic industry. You cannot compare different industries. You must compare the companies within the same industry. At least you're comparing not so far. And for example, supermarket business, what do? They do in cash. They have a lot of people shoplifting. That's supermarket industry. If you look at electric, or let's say a handphone manufacturer would never worry about people stealing. And they will not do cash business. They will do credit business. So you're not comparing same to same, right? So if you're comparing ratio, you must always compare within companies of the same industry, which means you have a problem. Let's say, for example, you got a big multinational company, big company got various types of industry. So in public listed company, they are supposed to prepare their accounts by segment. Let's say, for example, Sime Darby, big company in Malaysia. They got housing, they got estate, you know, they got construction, they even got cars. That kind of big company. A company got various type of industry. They participate in different type of industry. They are supposed to report their balance sheet and the P&L by industry segment. So if you are comparing Sime Darby cars, we can compare with Toyota, right? But you cannot compare the whole Sime Darby with Toyota, because Toyota only talking about cars. But Sime Darby is cars, construction, plantations, and so forth, right? So, and nevertheless, that's a key point. When you're doing ratio, you must always compare within the same industry. Okay. Now, there are one type of main ratio is called the liquidity ratio. This ratio will tell you whether the company can meet this short-term liability. Now, if you cannot pay what you owe people is going to come after you. So this is a very important liquidity ratio for short-term. Solvency ratio is, can the company pay all their long-term means more than 1 year loans, okay? Or profitability ratio. So liquidity ratio, solvency ratio, profitability ratio, and activity ratios or efficiency of the management ratio. Okay, so we can use for benchmarking within one company with another company within the same industry. Okay, so let's look at it. So under profitability ratio, you got gross profit ratio. The gross profit of Aeon compared with gross profit of Lotus, right? The net profit ratio was a percentage. So these are ratios, it's percent. Gross profit ratio, net profit ratio percent, operating profit ratio or ROC, return on capital employed. Okay, or this is profitability. How do we use this profitability ratio? Small company, their profitability ratio is net profit ratio is 20%. Aeon, so big company, only 1%. But in terms of money, Aeon is more money. But in terms of efficiency, Aeon not so good as a small company. Okay, so solvency ratio, debt equity ratio, liquidity ratio, can you pay? So there's a very type of ratios. Okay, so what are the formulas for these ratios? Then you better go to this source here. Okay, let's look at this source. They will teach you the ratios. We open the hyperlink. So you got different type of ratios. We explain to you what are ratio, how to calculate the ratio, key takeaway, okay, ratio types explain, and so forth. Okay, so you can actually go inside there and look at it. Take a look at the ratios. Okay, now ratio Okay, I'm sorry. Can you hear me now?
Yes,
Yes, sir.
doctor.
Yes.
I think just now the line was
Hello.
cut, huh? Okay. The line was cut. I think now you can hear me. I will continue, okay?
Okay, sir.
Okay.
Okay.
Okay, hang on, let me just take one more time the attendance.
I'm working today.
Let me share the screen first. Okay, I don't know how long was the line now? Subhash?
You are clear. Yeah, quite clear.
Yeah,
Yeah,
how
clear.
long was the line now?
How long?
So clear.
Yeah,
Is it down very long?
less than 5 minutes.
Oh, okay, I didn't realize. Next time if the line is down, please WhatsApp me, because I didn't know the line is down because I was sharing the word file. Okay, so there is a video for you to see. You want to see, and the chat box, and the course is normally summary one. Let me just look at anything interesting. How to prepare the cash flow statement. Just now I talked something. So these are the steps. Anyway, normally no talk. Okay, so that's why cash flow is important. So anyway, at the end of the day, I want to talk about interpretation of financial statement. What are financial statements? You will have the cash flow, the income statement, and the balance sheet. And we use this statement by many people for various uses, whether internal user or external users. So the financial statement must be accurate. To ensure it's accurate, we have external auditors. Okay? And we need to file it with the government. If not, you get yourself in trouble with the government. But having said that, there are some limitations to financial statement. Your financial statement is reporting on historical. What happened in the past 1 month, the past 1 year. What does that mean? It does not help you for planning the future so much. The only way it helps you is to have the actual versus the plan, and you found the problem, the variances, and you take action. But do you realize the action only comes out when you have the actual, and the actual is actually already occurred in the past. That's why there's one field of accounting that's called management accounting. Management accounting to try to help you to plan for the future. Okay, not rely so much on the past. But financial statement is reporting on the past. That's the issue. Okay, so it has got its benefits, financial statement, but it does not help in managing for the future. Okay, and of course it depends on the accounting standard and policy. So that's the limitation. Why? Why is it a bad thing to follow standard? No, it's not a bad thing. It's good to have a standard, but sometimes the standard are very tight. Okay, now you may have certain industries that is cannot follow the normal practice. Let's say the mining industry that have a long lead time to get money. So sometimes the standards are not flexible. Possible subjective to estimate. You estimate your sales. Okay, I'll give an example. Now you're reporting this month. Your expenses. What is your expenses this month? Electricity. So you're estimating your electricity for this month, and you're recording your estimate. So okay, I estimate this month electricity was 10,000. So I put into the accounting as 10,000. But do you know the electricity bill come maybe next month, next 15 days? That's later. So if do you want to record December 15 for your November usage? You cannot. Because your November got November sales, and your November sales arise because of expenses in November. Okay, let's say let me give you an example. Okay, November you make cake. In the month of November you make cake. To make cake you must use electricity for the ovens. So the electricity charge to make cake to be sold in November is a valid expense in November. The electricity expense, because you relate the output in November with the expenses incurred, expenses spent to make the cakes in November. But the actual invoice for electricity bill only comes in December. So therefore, you need to estimate in November what is your electricity charge. Therefore, it is subjective. There are many things that are also subjective. Let's say, for example, salary. You get paid on the 31st. This estimate. Because the account department, HR department have not calculated all your overtime. They only calculated up to the 28th or 25th of the month. The last few days overtime, we don't calculate, we pay you next month. Right? And sometimes they don't even pay in the 31st November. By law, they pay 7th of next month. Therefore, now it's November. October, I work. I don't get my salary until the 7th of November by law. That's the latest. But you make your accounts up to 31st of October. That's 7 days. Accounting, you didn't do the accounting calculation for your salary. Why? On the 31st of October, accounting people go back. You think you work overnight and calculate your salary for you. No one. They only calculate first and second. Make sure everything is all right. Contact the bank, transfer the money to your account 3rd or 4th of November. So you estimate what is your salary expense in the month of October. So this is okay. Now it does not include intangible asset. Financial transaction is recorded. What about those things that is not recorded, intangible? Starbucks, McDonald's. You know McDonald's have the M sign, the yellow color one. Starbucks, you know the green color one, the girl, is Starbucks, right? Those are valuable. If you want to use the Starbucks sign, you want to use the McDonald's sign, you have to pay royalty. But you have not paid yet. But those are assets. And those assets is not in the account. Why? Because you have not paid to use that logo. So therefore your financial statement is under declared for asset. Potential for manipulation. Oh, shareholders give money to directors. Directors appoint the CEO. CEO appoint the GM. The GM appoint the manager appoint the supervisor will take care of all the workers. Sure, there's no manipulation somewhere. Somebody poke up their accounts. Not sales also, they say got sales. Right? So if you got many branches, Penang, Malacca, Seremban, whatever it is, one branch manager says scared, cannot make his KPI for sales, he went and block and say he makes sales. He made some documentation. You, the headquarters in KL, accept the documentation. Oh, there's a sales for 10 cars. I'm so happy. Right? Record it in your income statement. Show a good profit. Take the good profit, go to bank and borrow money. Ask the investor to invest. All this is available for manipulation. That's why you have a lot of accounting scandals. Okay, so these are the limitations. So let's look at the video. And these are some of the key points. Okay. Other than that, was somebody okay. Now, to summarize this particular chapter, we have financial statement used by internal, external. Please be aware. You cannot just look at the statement by itself 1 year. You must see the trend. You can compare with another company. And how you compare with a big company and a small company, you use ratios. You can see the trend. Let's say, for example, the trend is going up for profit. Most likely, you will have more and more profit in the future, therefore the bank will lend. If the trend of your profit is going down, right? Most likely next year also we won't make much profit. So we are using friends ratio, not 1 year financial statement, last 5-10 years. To see the trend, then we can decide whether to lend you money, to supply you with the goods, okay, or to buy your shares. Okay, that's all. Having said that, please be aware that financial statements are comparing about the past. You're using the past as a decision for you to invest, which may be very much different from the future, even though there's a trend. That's why you got complete Sunday too, go down. Right, there's a trend. So, like for example, if you are talking about Nokia, I think some of you may know what is Nokia phones. Nokia used to be #1 phone in the world. Understand? Check the profit and loss is very nice, right? Financial statement not very nice. How come they go down? As far as financial information is correct, they report very good profit, but financial statement would not record the other non-tangible monetary things. Like the financial statement would not report that Nokia cannot see smartphone being the new champion. So Nokia still keeping on making all the old phones. No app one. That's why Nokia down. Financial statement with the trend for Nokia will show all nice and it will not show down. Because it's financial. It's reporting on the historical part. So be careful when you use financial statement. You must have in the back of your mind that financial statement is about that. It does not reflect the future. Okay, even with trend, because a trend is just that, a trend, a historical trend. You can project your trend. The fact that you're projecting the trend, you're doing a forecasting of the future. And if your forecast is not correct, that's what happened to Nokia. What happened to Nokia now? Gone already. What happened to Ericsson phone? Gone already. I don't see Ericsson phone anymore. Right? So many business, you don't know. You can look around. So many business, they are going very well, suddenly they go down. Financial report for all this company will be very good because when it's going up. But the financial statement will not help you to forecast what's going to happen in the future. And if something happens, like Nokia underestimate the smartphone business, Nokia just went bankrupt. That's all. Okay. That's the next one. Financial environment and the role of business. This is a very difficult chapter. Okay, it starts to talk about the various type of financial institution. Now, what do you mean by financial institution? How do I say? Banks, okay, insurance company. Malaysia, you got the EPF, okay, social security company, mutual fund company, stock exchange. These are all financial institutions. All these are controlled by Bank Negara, the central bank of who control Central Bank of Malaysia? Bank Negara. Who control Bank Negara? So see, banks, all the financial people, whether you're investment banking or you're Islamic bank or you're a mutual fund or you're insurance company, right? All this controlled by Bank Negara. Who control Bank Negara? Bank Negara is controlled by Prime Minister. The Prime Minister will recommend the King to appoint members to become the board of directors of bank. Understand? In other words, democracy, we voting for a particular party who appoint one person as a prime minister. He will go and advise the king who are the members of Bank Negara, which Bank Negara control all the banks. And when we control the banks, we are all being controlled in terms of interest rate, in terms of borrowing rate, saving rate, who can get loans, who can get loans. Right? We're talking about money. So that's the normal type. Now in US, we have it the Federal Reserve. It's another type. In US, the Federal Reserve is they don't have Bank Negara. They don't have a central bank. They have a Federal Reserve. The word federal is misleading. Nothing to do with the dollar. Federal Reserve Their members are maybe 5,000 commercial banks in America. 5,000 commercial American banks are members of the Federal Reserve. They are shareholders. Federal Reserve is a company, not like our central bank. Our central bank is government. Federal Reserve is not government in US. Okay, so they will take care of the monetary issues, which is better. Federal Reserve, not controlled by government. They'll say, I'm independent. I will not. Federal Reserve is not subjected to political pressures. No, if you are the prime minister of a country, and you favor manufacturing of cars, so I will tell Bank Negara, okay, Bank Negara, you people, you don't listen to me, I'll change you. So you better listen to me. You members, Bank Negara, tell the banks to give more loans to companies that manufacture cars. Political pressure. But we say it's okay because it's democracy. But to be a prime minister, you only need 51% population voting for you, or voting for your party, and your party appoint you as the prime minister. But we are saying it's okay because it's democracy. At least 51% vote for you. What about the 49% who doesn't vote for you? They have no say, right? Because you vote, you win by election. So the prime minister, which is a political person, will control a central bank, which will control all the other banks, which now actually control the money in the market. That's one method. Another method is in US Federal Reserve and also the European Central Bank, ECB. They are not government banks. They are members. It's a company. So they make profit. Federal Reserve make profit like any other company. They are not subjected to politics. Right? So why does the US government allow? Too late. The law is like that. Nobody, they don't want to change it. The banks, if I'm the Federal Reserve, I'm not going to let President of the United States to control me. I am my own company. The shareholders in Federal Reserve are banks. What banks? American banks. Maybank opened a branch in New York, cannot become a member. It is homegrown American, 5,000 American banks are shareholders of Federal Reserve, which is actually a company. Okay. So beside that, you have a stock exchange. Of course, the government will get the stock exchange. Then you will have bond market. All this will be controlled by government. Okay. Through the Bank Negara. Okay. So the various type of financial markets here is here. Okay. Commercial bank, investment bank, Islamic bank. These are all financial institutions. Okay. Investment banks. So investment bank is not the same as our normal bank. They don't have saving account for small savings. They are dealing with big money. A lot of them dealing with M&A, merger and acquisition of things. Okay. Yes. This is agency theory and governance. Yeah. This one is sensitive. We, the shareholders, give money to the company. What we, the shareholders, want? We want that dividend. We want the share price to go up so that we can sell, we make profit. So we, the shareholders, have got different thinking. But we give the money to the board of directors. Now, the board of directors got the money and they set up company. Board of directors are thinking differently. They want to carry on, become board of directors. Right? They are not so interested whether your shareholders are happy or not. They want to be interested. The board of directors are interested in they themselves become happy first. What are the employees in the company, the CEO of the company? What are they interested in? Bonus, continuous employment, which is different than the shareholders. The shareholders, once the company to make profit, give me back the dividend. Do you know the dividend company gives? That same money can be given to the CEO or to the employee as bonus or salary increase. We call this the agency problem. The provider of money don't get to know how to use it. Don't have a chance to use it. The one who don't provide the money now have the money and they can do whatever they want to do. Right? So then we call it the agency problem. And how to solve this problem? The government wants to talk about corporate governance. Corporate governance in Malaysia, we actually got the Malaysia Corporate Governance Code. The board of directors must do what. Okay. First one, the board of directors must not do things bad for the company. They must act in good faith. The board of directors must be competent people to run the business. That means you cannot have any Tom, Dick, and Harry to become a director. You must be competent people. Now, the board of directors may be composed of maybe 7 or 10 people or whatever it is. Majority must be an independent director. Now, inside the board of directors, we have many types of directors. Okay? One type is called the executive director, like me. Okay? When I was a board of director in Sony, okay, supply chain or Sony EMCS or Sony TV industry or Sony TV video company, I was the executive director. Means if I'm a director of the company, at the same time I'm working for the company. So I get a salary from the company as my normal salary working. Of course, I will not be so straight. Right? I don't care so much the shareholders. I care about myself first, right? As an executive director. So in order that I do not make crazy decisions that is not good for the shareholders, the Malaysian MCC Code of Conduct for Governance, okay, insists majority of the directors, at least 51% must be independent. So I'm an executive director, I'm working. Independent director, they don't work in the company. They maybe met once a month to discuss about the company, to show guidance, to show vision. 51% of all companies, public listed companies in Malaysia, must be independent. Can you see the word independent? They are not depending on the company. Not like me. I'm working. At the same time, I'm an executive director. Okay. So another one is minimum 31% female. With last time is our board of directors is all males, right? Now no. You need to have something. And inside this board of directors composed of 7 or 8 people, doesn't really matter. They have a few committees by law. The audit committee, the governance committee, remuneration for directors' salary and amount, nomination committee, who can be the directors, and planning for directors, new directors join, planning for directors to retire. These are the 4 important committees. Each of these committees are composed of directors, majority independent directors, and each of the committee will report to the main board, which is also the same number of directors, same person. Okay, same person, because the board of directors, those directors also sitting in the various 4 committees. Right. The sole purpose is to make sure that the directors don't do anything crazy. Now you must remember, the directors appoint the CEO. The CEO appoint the CFO and appoint all the other 54 other general managers. All these people are all employees. Even the board of directors are to a certain extent employees of the company. And all of them must be acting in good faith, must be competent enough to sit in a position. Practical. Don't be so happy if people ask you to become a director. You better check whether the company is making profit or not. You better check the company is not doing any hanky-panky. Okay? So those are good companies, then they invite you to become a director, you'll be happy to accept. But if you become a director of a company that's poorly run, you will launch it. Because if the company is down, or company don't pay any money, okay, banks will sue the company bankrupt, then the bank will sue you, the director, because you are supposed to be running the company. No, I'm a director, I don't run company, I only appoint CEO. Sorry. The rules are, you are the board of directors, you are given the power to employ the CEO and the general manager, everybody. Who asked you to employ wrongly? And all these people you employ is under your direct control, and they are doing bad things, and therefore the company bankrupt, cannot pay, the bank the company. Personal liability. Because they will show, the bank will show that you are negligent. You are not doing your correct job as a director. So in order not to have this kind of problems, so we have a Malaysian Code of Governance. There's a code, what the directors can do and do. Now in the company law, same thing. In the Malaysian company law, directors, if they are not doing certain things, normally it's around $3 million fine and 5 years jail. Okay, so don't become a director for the fun and become a director. Okay. And so this corporate governance agency theory. So now this is basically agency theory. The principal is the shareholder, and the agent are the managers. So shareholders employ somebody who will manage the business, which employ the managers, and manager got their own self-interest, right? Want to have steady job, good salary, promotion, and so forth, bonus. But these people have a different role. They were thinking about shareholders, I want to have dividend. That's why when a company want to do R&D, a lot of money, do research and development. Some board of directors, let's not do R&D. Let's make a lot of profit. Declare dividend. Let the shareholders become happy. But because they don't do R&D, company will be suffering in the future. But board of director will say, that's not my problem. That's the future board of directors problem. Okay. Okay, anything else? Time value of money, this is an important concept. It basically means time value of money is defined as the concept we state that $1 now is better than $1 1 year later. Now you have $1 in your hands right now. You keep $1 in your wallet after 1 year, it's still $1. But if you take the $1 right now, you go to the bank and put it as a saving interest, you get maybe 1.05. It's 5%. That's what it means by time value. Money is affected by time. If you do nothing, it's the same way. If you have done something, save it, invest it, you will earn something. Therefore, that's what we mean by time value of money. We state that purchasing power of money differ with the passage of time. So, how will this affect you? For this concept, time value of money, spending. Save money, you buy more right now. Save money, you buy less in the future. Why? Inflation. Okay. Saving money today has some value in the future. You save $1 right now, future become 1.05. Okay. Borrowing. You borrow money and repay it maybe slowly in the future. Okay. Of course, you have to pay interest and so forth. So this is the topic of time value of money. Okay, so I want you to read. Now, why is this important? Should we invest 1 million, project A or project B? Let's look at the investment criteria. The investment criteria will be important. What is the aim of the investment? This investment is 5 years. This investment is 10 years. This will get how many return per year? This will give how many return in each year? We use the concept of time value of money to evaluate which is the better project to invest. Number 2, how we use time value of money. For example, okay, let's make it personal. You are now say 30 years old. You will get married and then maybe 20 years from now, your son want to go for university. So you need to save money. How much money you need to save now? Every month, how much you must save to get ready 50K in 20 years time? That is money. So how much to invest now? At what interest rate? For how long? To get 50K. If your target is 50K in 20 years time for your son's education, that is time. So time value will help you to decide how much you need to save. Okay. If the business want to buy a factory in 3 years, and in 3 years, that factory is going to cost 10 million. So how much money we need to save now? How much profit we need to get now? Because after 3 years, you will get a 10 million to buy that factory. Okay, that is time value. So you can use time value of money for many scenarios, investing scenarios, borrowing scenarios, and so forth. Okay, so you can look at this. So you got time value of money and the future value of money. So you got a lot of formula. But I want you to look at the video. Actually, it's quite interesting issue. It's a time value of money. Okay. Now, because this topic is not only accounting, it's business accounting and finance. So we look at this. Okay. Normally, higher the risk, higher the return. What does that mean? Now, if I scared of risk, I'm old. I don't have much money. I want to make sure my money is invest, for example, in bank, put into the bank, and they give me a steady amount so I can manage. I'm very scared of risk. But we have a young man. He's not scared of risk because he's working, and he'll be working for the next 30 years. So he'll know his income keep on coming. So okay, he will say, okay, I got some money. I want to invest in more risky, because risky investment will get higher return. If I put in the bank, it's very safe, but the return very small, very small. 0.5% saving account interest. This young man, maybe you want to invest in AI, you want to open a business, open a chao kway teow or open whatever, the return will be huge, but his risk is high. That's a business. That's what it means by risk and return trading. Which one do you mean? So sometimes you may have a portfolio. Okay, you're a very rich man. Some money you put in the bank because it's steady income, no much risk, unless the bank go bankrupt, which is seldom. Or in the portfolio, 50% is for risky investment, so can get more return. So they can score a portfolio. So how much risk and how much return is what you want to do. So in for example, a financial portfolio, I may want to buy government security, a certain portion, and a certain portion I will invest in some sort of company like Nestle, very steady company, or I will want to invest some money, some additional money in another type of business which is more risky, maybe AI, right? So Nvidia shares go up and go down, bank safe deposit never lose money, Nvidia one go up and go down, maybe you got some steady other companies, let's say for example, Nestle is a F&B company where people need to eat, so that's what we call a portfolio. Okay, so you need to understand risk and return as an investor. So if you're an investor, you're looking at all the financial statements. You got risky company, not so risky company, right? You got a very risky company. You will expect as an investor, when I look at the financial statement, okay, the three companies have the same profit. Okay, example, three companies have the same number of profit, but the risk is different. This company is same amount of profit, but very stable business. They will not give you I don't know, 5 million. Another company, young company, same amount of profit, but they will keep on thinking about new ideas, try to hit the market with some new products. These people are the ones that will give you more return. But because it's risky, they can also go better very fast. Right? So that's how you should teach risk. Now, how do you measure it? I think subsequent chapter will teach you how to measure risk and what you want. It basically comes down to a very simple formula. Riskier the asset, the higher the return. Less risky asset, less return. So now we look at risk. Now, when we look at risk, there are two types of risk. Okay, systematic and unsystematic. First one, cannot control. When we're looking at a business or we're looking at the industry, there's certain risks you cannot control. Okay, it's maybe in the whole country unemployment go up, or the whole country employment booming. These are beyond control. We call it systematic risk. Now, the other type of risk is called unsystematic. It's control. We can control the risk of this company. Okay, let's say, for example, mineral water. You are making a mineral water. Okay, unsystematic risk is macro level. Okay, shortage of water. If you are in Bangladesh or in Pakistan, shortage of water. Okay, shortage of water is because maybe quarreling with India or whatever it is. Therefore, this is called systematic. And all the manufacturers in that mineral water industry will be affected. Same amount. Okay. Unsystematic. Now in Bangladesh, 5 companies also making mineral water. Each of them got different type of risk. One is using old machine, one is using new machine, one is taking water from the well, the other taking water from the river. So all this is controlled by specific company or specific industry. Okay, so these are examples: interest rate risk, market mix risk, purchasing power operation risk, here business risk, financial risk, operation risk. Now, so why do we need to know the 2 types of risk? Because we can understand the risk and we can calculate. In the next few chapters, we can learn how to calculate risk. And it depends. If you see the calculation of a particular investment is very risky, let's say the risk is 10%. For old people, 10%, no. Young people, 10%. Okay, I will take the risk. So, calculate the risk and see what type of risk taker are you. If you are not so risky people, you will not take the risk. But if you are risk people, you are comfortable with the 10% risk, go ahead. Okay. So this is up to chapter 4, and I think now it's 4 o'clock already. I need to stop. We will continue the other chapter. Now, what I want you to do is that I want you to look at the WhatsApp. Okay. Some of you may not have. I will resend again all these things later on. Okay. I want you to come to the next class. Get ready. Okay. When we have discussion, I don't want it to be one way. Just now I tried to talk to you all seem to be hesitating. It's very difficult for me. Okay. Of course, I can just go through all the chapters, but it's better not to go through a chapter to have more discussion. I expect you to read and then come back to me. Deadline is no more 12. It's 21st. So submit everything in except for your final one, the article which you can submit in the end of February. Hang on.